Hi, Warriors. Blake said September was going to be wild. Didn't waste much time. Stock bulls might be saying, playing that Green Day song, Wake Me Up When September Ends. Everyone doing okay? Have a good weekend. Hi, AJ and Steve and James. How are you? John Hawkins. Have a good week, buddy. Mike, Ingmar. Hi, Bran. Hi, Kman, Blake, Hugo. Hi, Scott. How are you? So, before I get to the charts, how'd the chat room fare on this bludgeoning of wrist? I could ask K-Man. The K-Man was up last night. How'd the team do last night?
Well, I don't think there's too big accidents of of what I can see. So when
Mhm.
the sterling, but it all kicked off right at the opening of the UK bond market, the gilt market,
Okay.
where everything all of a sudden.
Yeah. Yeah, I heard people were criticizing what Starmer did. I saw that yesterday about adding someone to the cabinet, just reshuffling the cabinet. Was that a confidence problem for the bond
Yeah, and
market?
especially Reeves as well. She added a lady to her team who is an ex-Bank of England member who is also known for wanting to tax the wealth. It was all bubbling under the surface, but nothing really filtered through over month end and then yesterday. And but all of a sudden this morning, when the UK bond market opened, it just yeah, it
Yeah,
just hit the sterling pretty hard.
there's a
Yeah,
culprit, and it's
those
it's killing our bond market too.
and every one of them. I
Yeah,
mean, as soon as the gilt market opened, the rest just followed suit. And as I said, it was already happening before, but the FX market did not really react to it. Now the FX market really took notice. September, here we are.
yeah. All
Um,
right, go
yeah, and then
ahead.
the dollar followed. So the dollar actually acted a bit as a safe haven is a big word, but
Yeah,
just a hedge and a refuge against what is going on. And we now also see the equity markets are kind of losing it too. Yeah, so we could see quite a bit of moves emanating from all of that.
okay, yeah. There's the S&Ps on the verge of taking out the 200 on the 4 hour.
Mhm.
Not gonna look too good on closes under 64. Let's just take a look at really what's been the leader. And I know I was telling people to sell NVIDIA. So we're under 170 real, or at 170 real key. So that's down about $5 on the opening. We'll see how that holds. And it's kind of surprised Bitcoin's up in spite of all this risk off. Maybe it needs a bounce to 114. But are you doing anything in currencies? I mean, I don't know what to do. I
Um,
almost lean towards buying the euro, but I haven't done it because
mm,
I wasn't expecting this in the dollar today.
no, but I don't think that many people were, I mean, it's a case of when does the bond market have enough of it all? And we seem to have had like a leg today. But I'm not sure the dollar is really something that you should have in current context, and also looking ahead to all the data that will come out. So I can actually see take away the sterling, but I can actually see the currency still remaining in broadly in the range. And we've been
Yeah,
talking about this range for a month now, and it's still there. I'm a little long Aussie for as long as 65, 64.90 holds. But I'm actually I bought back some gold this morning as well because I mean through everything, I'm just I'm not trading Bitcoin, so I'm not even looking at it. But to me, gold is still a hedge against everything really, and
it
I
is. Yeah,
and we now have. You remember last week we were talking about the Asian session in gold, and I said like there's not been one single session that the Asia has been driving gold. But now, since the start of the week, yesterday and today, Asia has been buying gold again. And if you look at what's happening in the bond markets elsewhere, if you look at what's happening in equity markets now, is still your perfect hedge, in my opinion. And we could see fresh highs there again.
Yeah, didn't we make, wasn't this candle a new high? Over 3,500?
Yeah, 35.08 in Asia, and
Yeah,
then it came back, and then we had this dollar leg up this morning, and yeah, we just came back to
yeah.
34.70s. But I mean, it's just the volatility of the beast, yeah. Yeah,
There's
but now we,
silver. Silver is, 42 seemed like it was, not going to happen in a week.
it
But,
might actually.
we're not that, well, I mean, last week or 2 weeks ago, but now
Mm,
we're almost there, right?
yeah, now we are almost there, and I still think well, I've got my order in at
People
40.
are,
41,
people,
55, 58, and to take
yeah.
some profits.
Okay. I know a lot of people are already talking 50 now that we cracked 40.
Of course.
I'm not so sure about that. Um, Anyway, I would say the winner of the weakest response to a strong dollar goes to USD NOK, very limited, and then second worst would be Canada. So, I'm not convinced that these have that even Canada's bottomed. I still think I'm going to have a chance to buy it
Mm,
under 6.5. So,
mm.
anyway, that's it. I mean, I haven't done anything new. I know that, let's see who's here. I know Stelios wants to
Stelios is there.
talk. Yeah, he wants to talk about take a victory lap, bro.
I'll talk about other things then in that case. No,
Okay,
I can take the screen and go through a few things.
you got it.
All right. Okay. So first of all, it's good to be back after 2 weeks of holidays and not. No, I'm kidding. It's always good to be back. But people talking about yields going higher today. Oh my God, it's the end of the world. Well, we're still in a range. It is tightening in the 10-year US, and the 10-year yields are actually making new highs. I think 10-year highs or something ridiculous like that. But 10-year US is still range bound. My thesis remains that yields are going to go lower. I know I'm the contrarian. I just think that markets really do not put any probability on the scenario where central banks do go on yield curve control, both in the UK, the US, pretty much everywhere. We've seen that Japan do it, and they were quite effective for a while. But of course, now they've started hiking rates and all that, and it's gone away from them. But I do think that the path of least resistance for yields still is to the downside, because if you think about it, we have all these reasons for yields to be absolutely crushing it to the upside, and they're not. So what happens when something you have all the excuses and it's not moving is going to
Yeah,
go the other way. And I think the market's very one way in bonds. Market's quite short, so I think the path of least resistance is lower. Of course, I could be wrong, but that's my gut feeling. So if so having said that, let's look at the Dixie as well, which is very important. Obviously, we're rallying today, but I think this is still the end of this journey. We're not that far away, 3 points in Dixie is not anything massive. I think we're going to have one last push lower, and then I'm going to start looking to get long dollars. But for now, this is my view. And talking about currencies, um, the pound, like Kman said, is underperforming because of the political scene in the UK, and we are now edging towards 87.5, which is a very, very big level or area around there. The next one really being 90-ish, which has been very important, but for now 87.5. So if you have a view that this is overdone, this is not a bad place, 87.5, to be taking shorts, but obviously with tight stops, because above that, we probably have another couple of hundred pips if we break that. NOK, very correctly, Dale, you said it's been doing very well. I think we had this almost classic breakdown and retest. Okay, we went inside a couple of times, but really it was a retest, and I think we're going to be going lower in that as well in the near future. And the other one, which is very close to support, is MEX. We've said for a while that this is quite a clear support zone. So if you're bullish, it's not a bad place to be, going along with stops close by. But if this breaks, then I think we're going to go venture towards 16.5, 17 or so, with positive carry as well. Not as big as it used to be, but it still is positive. So metals, gold, magnificence, broken out, new intraday all-time highs. Nothing to say about it, and really nothing to say about gold for the past couple of years. Every dip has been bought, central bank buying, everything. All the reasons are there, and it just keeps going. So I don't see anything else other than bullish for gold. And of course, to an extent, same applies for silver and platinum. And silver has broken out of this channel. It's now trying to retest this breakout. It's about 60 cents below, but it's been bought straight away again today. Well, I want to see what happens when New York comes in, because New York Open is usually when we see weakness in silver. I am still long my positions from way below, and I'm carrying for now. I will probably get rid of them if we break below 39. So if we negate this breakout and we take out this previous high here around 39.4, and we start venturing below, I'm going to get out. And it's been an absolutely fantastic ride. And but all good things come to an end at some point. I'm also long platinum. People in the chat room will know that. And my latest, I had one from the breakout up down here way below, and then the other one was from 1313 when I wrote this. What was it, about a month ago, and or less than that. And platinum has broken out as well. Okay, it's reversing a bit today. Maybe it's going to try the classic breakout and retest. I still think things are quite bullish for all metals. Of course, a general risk off will cause them to find some some resistance. But for now, I'm bullish all three metals. And talking
Could you
about,
get
yeah,
an ABC like the first
which one?
break was 1490 to 1280. That was 210, and
Oh
this
yeah.
could be and then we get 210 from those highs that we saw last night for a C, and then you have like a bull flag down there.
So you say, see, a C going all the way down to whatever it is,
Yeah,
1100 something.
yeah, whatever it is.
Could do, of course, everything's possible. I just think that this consolidation sideways here was quite
yeah,
convincingly broken. So for now, I think, well,
yeah,
for now, I think this is looking quite strong, even though it's going east down 1.5% today. It does, it's still
yeah,
broken out. So let's see what
yeah.
happens when New York comes in. Um,
Okay.
the S&P, it is down today, but overall, I don't see yet any technical bearish signal. If we break below 63.45, which probably comes in with the same, the 50 DMA is probably going to be at the same level. That
Yeah.
could be a sign. I want to see a break below 6200. That will tell me that we're going to make new lows after that. So for now, I remain bullish. Of course, today's move is not great, but we've seen quite a few dips which have been bought straight away. And with that, we look at cryptos as well. Interestingly, Bitcoin today is up, even though the S&P is down, but the correlation has been broken recently. So what do I make of this? I don't know is the answer. I'm not trading cryptos. So, if you put a gun to my head, if I think
It's a good
that yields
answer.
are going down and the dollar is going down as well, then theoretically risk is going up, which means the cryptos go up. But, I'm not going to trade these. So,
But
How
Bitcoin,
about
yeah, I was just going to say Bitcoin really started to slide this morning as traders got in front of their desk. They looked at the futures, and with the S&P breaking through wedge support,
yeah,
Bitcoin just started sliding over the last hour and a half.
yeah.
Stel, you're usually a long-term oil bull. You have an opinion on oil?
We're at support. Again, I've been saying this for weeks. Okay, we broke down momentarily back here in April, but
Yeah.
we're at this really important zone. Uh, Good question.
Okay.
I'm not doing anything here. It has to resolve at some point.
It's a
Um,
higher low. The whole
Higher
world's
low. Yeah,
bearish,
yeah,
and the
yeah.
whole world's bearish oil.
Yes, that's true. That's true. So, and we have all these, 50 DMA, 200 DMAs coming up. If these get broken, then I think the route is clear for higher prices. But at the moment, I have nothing to say. So I'm
All
still
right.
watching it.
All right, go ahead. Plead the
Still
fifth.
very
Plead the
geopolitically driven, right? Oil,
yeah.
if you look at Russia situation,
Uh,
OPEC is meeting the next weekend, still
yeah.
very politically driven.
Yeah.
Yeah.
And not to mention you had this
What
meeting
isn't?
well, I was just going to say we had this meeting between Xi, Putin, Modi, and now
Him.
North Korea's Kim
Him.
just he just got there into China as well. So I mean, I think that's also, playing a role in what's happening with crude. And you want to talk about some of the factors that are really driving down futures this morning. I mean, that little coalition of four major
Yeah.
leaders, I think, is weighing on the market as well.
True.
Yeah. Good point. Good point. I think when's the military parade? It's coming up. I think they're all good. And I think China's unveiling a new weapon in the parade.
Really?
What's that?
Yeah. Yeah, I
Oh,
read
Wow.
that.
really?
Yeah, so they're very good at theatrics.
Yeah, well, I mean, I mean, I think the market should be concerned a little bit.
Worried. Yeah, I
Yeah,
am.
I mean, and you look at the futures, and let me just pull up the futures really quick, or the S&P. I mean, we are breaking through pretty key level support at this point. We're still very, very close to all-time highs. I mean, we're still in breakout territory. But as we get near this like 6,200 level, I think this is going to be really critical, and
Yeah.
and it's still 200 points away from where we're currently at. But we are starting to break through some of these support levels. One of the other things that I don't know if you guys have really paid much attention, but we also had the appeals court.
Oh yeah.
Strike down some of the tariff the reciprocal tariffs. And I mean that in itself, that uncertainty, when the market, and market participants go, okay, this is what is going to happen, and then now that comes into question in an already murky trade situation. I think that's something else that's actually weighing on futures as well. So there's a lot going on as we kick off we always call this the new trading year as far as we're concerned, because this is where traders are all coming back off of summer holiday and they're getting in front of their computers. But man, there's a lot going on today. This sterling move is very scary if you're long sterling. Wouldn't you say, Kman? I mean, we've come off pretty big. We're breaking through, some support. We're at a 50% retracement, but this is all very critical levels of support that we should be focused on. And yet it looks pretty scary, right?
Yeah. I mean, when the market that is always what happens in sterling, when the market sticks its teeth in, and most of the time it happens to the negative side in sterling. It's always kind of easier for the market to trade negative sterling than positive, really. Um, but yeah, we are on the support right here and now in the cable 133.65, and it's looking ugly. And euro sterling back above 87, and that is equally looking still very big. Yeah, I mean, and
Well,
the play is just continuing. The gilts are continuing to slide. Equity markets continuing to slide. Sterling is also a risk currency. It's not looking good for the sterling.
It's not.
It really is not.
And if you look at like longer term for sterling too, this is the big long term like euro sterling chart, and this is the one thing that I do want to point out. If we get above this, I know it's far away from right now, but 87.80 or so, let's just call it, we can call it 88 pence. But look at this big range. I mean, if we break above 88, which is right here, I mean, that's about 50% of this big long-term range. I mean, we could be trading above 90 pence pretty easily. So I think sterling bulls need to be very, very careful here, because the cross rate effect that you would see just in euro sterling, I mean, that can send the pound really reeling here. So I don't know. It looks very vulnerable right now. I don't are you still trading euro sterling right now, Kman? Uh
I actually missed the move this morning because I was doing something else when it all booted off. But yeah, I mean, if, I'm probably going to buy dips. There's no two ways around it. Now, this being said, we have also next week that French vote, and the French bonds have also started to come off. Spread has started to widen a bit with Germany as well. Usually, that's not a good sign for the euro either. But out of the two, sterling is really the weaker. I guess we are going to find quite a few deep buyers in euro sterling in the today or in the sessions to come, because the market is really not liking what Starmer and Reeves are doing.
Yeah, I mean, it looks, ugh, God, when I got up this morning, the first thing I saw is I saw sterling was down 150 pips. I'm like, what? Wait a second. What's happening? And then, obviously the first thing I'm going to do is I'm going to go over to, go over to our updates and find out, okay, well, this is exactly what is driving sterling lower. And you had wrote that out pretty well this morning. I had a very good picture and idea of what's happening. Hey, we have a lot of data coming out this week, and the major data that we've got coming out this week is obviously the jobs report. So, but there's a lot of data that's coming out in between now and then. We started with ISM manufacturing data today. You know, Stelios, I know you popped in a little bit earlier with the jobs report happening this week, a lot of other data. How's this going to influence how you're gonna navigate the market this week?
Uh, Well, it depends on what data we get, but I showed my views, I showed my levels, and I am at this point with my main positions being in the metals. I'm just ready to take profits and get out. So if that happens, I'm not going to hesitate, and because the move has been quite big and quite rapid, so there's going to be pullbacks in pretty much everything. But it's going to depend on the data. So if you ask me what I think the data is going to be, I have no clue.
Well, I mean, gold has been strong. We are right up against the all-time highs here. So I mean, your assumption is that we're going to break it, but what happens if the U.S. data continues to be resilient? I mean, that would be something that would put gold, probably right back down towards the 50 DMA, I would assume.
Blake, do you have
Yeah.
any fib extension targets in gold above the market? Because that triangle would measure fit 3680. Okay, so you got something at 36 and something. Okay, 3729.
Yeah.
Yeah, because if you take the measurement of that whole triangle from the highs and lows in April, and then you add it to the breakout, what's that give you?
Well, this would be the minimum extension, which would be
Oh,
the
there you go.
161% extension. Then the maximum
Yeah.
extension would take us closer to 3,800, I believe. So
Wow.
actually,
Okay.
it's closer to 3,880. So yeah, I
Good
mean
luck.
that's
Good luck.
that's kind of what you would expect on any upside breakout,
Yeah.
which looks entirely possible,
Yeah.
frankly. So. Yeah, I mean, this move has been pretty amazing. And the one thing that I put these levels out there for the week ahead video. And the point I wanted to make there was, and the point I made on the week ahead video is usually when you consolidate at all-time highs, that's not a bearish thing, right? So we're consolidating at all-time highs. That's usually pretty bullish here. And so if the data comes in weak this week, for U.S. economic data, that's something that could put gold, in my opinion, that will put us right up here. Speaking of the data, again, we have ISM coming out, but there are certain currencies right now that the dollar's hitting new highs against. You have the Aussie that just hit fresh lows on the session. You can see the Aussies peeling off. Man, this is just the last, well, since the European Open. I mean, we're now down below 65 cents. You've got Bitcoin that is actually at fresh lows on the session. So that risk off is really picking up steam. I mean, people are getting in front of their computer. You can see Bitcoin's at fresh session lows here. The S&P futures are at fresh session lows. And I'm not sure how, here's the S&P right here. I'm not sure what's going to turn the ship today. So let me ask, I'm going to ask Kman really quick. Kman, you got data. Everybody's going to be laser focused on the US data coming this week. We're probably getting the most, I don't want to say it's the most irrelevant. It's, just the data that we're going to get today is the ISM manufacturing.
Yeah, the smallest one.
Yeah, and I think the services data obviously on Thursday is gonna matter a little bit more. But what do you think helps the market? Good data, or do you think if it's weaker data and people go, okay, it's weaker data, we're going to get those rate cuts that we're expecting, or is it going to be the stronger data that just keeps the market chugging? What do you think?
If you look at the difference between good and bad, you look at the employment component, and a weak employment situation is never good. So get a better employment that would give you a better chance of a bouncing risk. That is what is, in my opinion, going to happen. For now, I mean, market wakes up, a little bit of a shock there, continues to sell risk, and yeah, if they get a weak employment component on the data, because it's a big employment week, and it's actually not ending this week, because I've seen that the revisions to all the yearly revisions, they start like the 9th of September, which is only next Tuesday. So there will be a bit of an extension to the employment picture in the US right now. But yeah, as I said, the employment component will be the one that the market needs to watch, and the markets will have a bigger chance for a rebound if that component is good.
All right. Well, we have, it obviously everybody's going to be looking at we have a lot of employment data, not just in the ISM, but this week we're going to have the JOLTS data. We have unemployment claims. We have ADP data that's coming out. It usually comes out on Wednesday, but it's going to be out on Thursday this week because of the shortened week. We've got, I think I just said JOLTS. Then we have the ISM services data. So there's a lot of pieces of the employment picture that we're going to get this week. One of them kicking off with today's data. So we got a few minutes before Dale's interview starts, and I see Steve is here. Steve, good morning. How are you? See if he's unmuting or not.
Good morning, mate.
Hey, Steve. Hey, you've had a chance to take in some of the data. You see that the S&P is rolling over here. What are your thoughts about where we're at? As we kick off our last quarter of the year and probably one of the most busiest ones. Where do we stand right now in your mind?
In what regards? It's a very general question, and we have
it
very
is
little time,
mostly
so
with equities where risk resides right now, as we're facing all of this data coming in this week.
I was monitoring an ascending wedge in the S&P. I am monitoring an ascending wedge, and as we speak, with today's tumble of more than 1%, although it's extremely early on the day, we seem to be breaking below it, right? So for me, this is a very important technical formation, because if we do confirm by the end of the day, I think that we are finally going to see a deeper corrective move, one we haven't actually seen since April.
Steve, where do you have your rising wedge anchored to the left? Like Blake has it around 5,800, 5,900. Is that it? Is that where you have your line, Steve?
It goes back to 5,900, yes.
Okay, now Blake brought it back to 57. Because, if it is a wedge, it should retrace 100%, right? So
yes,
that could be a target.
There's the very shorter term wedge if you want to take only the the past few weeks of price action, which would target 6,200. Then we have 6151, which is previous. I'll give you support levels by order, right? Then we have 6151, which was previous all-time high before the corrective move that started in February and finished in April.
Yeah.
And after that, we opened the 5900, which is the end of the larger wedge, and unless somebody wants to extend it to 5750. But one level at a time. We know that this has been a very strong uptrend. So one level at a time, right? And definitely the first level to watch, if confirmed today, as I said, is 6,200. So this would be my first downside target.
And the real question is, how does the market react on a move like this? Like, is the dollar going to retain that safe haven status where it's bought in a situation like this? Or if there's so many question marks around the US, around trade, around our fiscal deficit, around what's happened with fixed income.
I think as usually, Blake, the dollar is definitely not going to be damaged, right, by a risk of move, because it's also it's also the obvious bid. A lot of people, when they want to liquidate the risk assets, they're in essence forced to go back into dollars, right? So
well, that's not what happened in April, because there was a flow of funds, into foreign markets. So we did have the dollar decline during that crash in April.
Yes, that is true, but that is not the rule, right?
Right, it's the exception.
Now, what Blake said before also applies at the same time. There are a lot of question marks for the US, and in general, despite today's rebound from a key support in the DXY, which came, as a response to the risk of move. In general, I think the DXY remains vulnerable, but it's less likely that it's going to be breaking down if we are indeed seeing a risk of move unfolding within the next few days. Can they happen concurrently? Yes, they can, but not very likely. Probably this type of move will save temporarily the dollar.
Well, there's so many question marks, Steve, that there's discussion of changing our flag and our national symbol to the Riddler. I know you young people know who the Riddler is. All right. Anyway.
Yeah, absolutely.
All right. Anyway, I thought I'd throw that out there. Great job this morning, team. Blake, you want to close it with anything? You got to be in the chat room when these kind of moves are happening.
Well, I mean, the best way to, like when I first get up in the morning and before I start posting all of my charts that you can see here, I start with reading what Kman said, what Ryan said. Ryan's unfortunately is out on a personal issue right now, but then you can read through the rest of the chat room and what everybody's discussing, what's rocking the market. And if you guys aren't, getting caught up that way or through the live squawk feed, then make sure you're utilizing ForexAnalytix. It's 40% off our monthly subscription. We're going to be pulling our summer sale here very, very soon. So,
all right, guys. Thank you very much, Steve.
Thank you, Dale.
Thank you, and Blake, as always.
Thanks, Coach.
You. Thanks, Captain. All right, so let's get a view from Turkey, live from Turkey, Okan Abar. Good to see you, buddy. Well, I mean, at least hear you. It's good. It'll be good to hear you. How you doing? Okan, I unmuted you. Calling Okan Abar. I think he's converting some Turkish lira right now to euros. So should be here in a minute. Okan, are you here? Maybe it took too long. Okay, well, I unmuted you. Can you talk? I can't hear you. I can't hear you. Oh, you have a problem. All right. See if you could resolve it. Maybe you're being censored by Erdogan. So anyway, Okan focuses on SOFR rates for having some ideas about currencies. I was hoping to get him on because, how everything doesn't work all the time. Okay, so there was a big advantage for the dollar, and yet the euro still continued to climb. That was from like I don't know, 114 level. I remember asking them if it could see 116 at that time. That was ambitious, and where we went to 1830. So you want to reschedule, Okan? Maybe the euro will be 109 by the next time I talk to you. All right, I think we're going to have to do that. All right, everybody. Okay, well, I'll give it another couple minutes if you think you could figure it out. Otherwise, it's just dead air. Dead air. What's that? You had a presentation made up? Oh, okay. Okay, too bad. Okay, go ahead, share it. I don't know if I have anyone scheduled for Friday. Okay. You want to come back Friday so you could talk about it? Let me look at my calendar. And that's an NFP day, so yes, I don't have anyone Friday if you want to come back. Okay. So we'll talk to you on Friday, all right, partner? Good hunting and see you Friday. Everyone have a good day trading. Let me just look around the room, look around at a few charts before we leave. You guys know I started buying natural gas. We'll see if this was just a little bear market rally. Had a nice advance, but it's giving it up. So let's see if we could put in a higher low. And S&Ps, yeah, looking pretty ugly. Guys, how long and how many times did I bring up 65.20? That a lot of guys were looking for 65.20 to complete this wave. And I think this count I saw, this completed 3. So now we're in a 4, which implies wherever the next low comes in, based upon different wedge targets that were talked about during the session, there's going to be in one more wave to new all-time highs, the melt up. So there's one more pullback before the melt up. And we're in eclipse season. We have a lunar eclipse on the 7th. I think we have a solar eclipse coming up later in the month around the equinox. So there's a lot of stuff going on where you could have big shifts in markets and everything else during this month of September. So I see a couple of good trades. First, this short, and then maybe by the end of September or so, the correction's over, and then we blast off again. So that's what I think could happen here. All right, and remember, more than any of this market talk, don't just count your pips, count your blessings. We'll see everyone since today is Tuesday. See everyone for Turnaround Wednesday or Wicked Wednesday or Wonderful Wednesday. Let's go with wonderful. Give me a wife you like a wonderful We're gonna have wonderful, wonderful. All right. All right. So I'll see you guys tomorrow. Stavros, nice to meet you. Adios, everyone. A tune. Now you're asking for you're asking a lot. All right. How about this in these markets? If you're worried and you can't sleep, lower your leverage. Just count your blessings instead of sheep, and you'll fall asleep counting your blessings. Okay, Will? What song is good? You wake up grinding your teeth? I do too. Get a mouth guard. Okay, I'll I grind them all day long, Hugo. Don't worry about it. You can always get implants. All right, that's a wrap, everyone. And the end of my stand-up routine. See you guys later. Thanks, Brad. You could be my manager.